Good evening and welcome to Prime Business. I am Emma Davis. For our stories for tonight, banking consultant Nana Otuochampong has impressed on businesses to be mindful of keeping a good credit score if they want to borrow at a low interest rate. According to him, if a business wants to expand and grow, having a good credit history plays a critical role in ensuring quick and cheap cost of credit. His comments follows the latest Bank of Ghana's annualized percentage rates, which revealed Standard Chartered Bank and Omni-Basic were among the banks that offered lowest interest rates to households and SMEs respectively.
The average lending rate is given by the Association of Banks, where at the beginning of every month, they will quote the rate that is to be used by the banks. So if they are lending below that rate or they are lending above that rate, it depends on the premium that they are putting on the borrowers. So Standard Chartered probably has people with a very good credit history, and therefore they lend to them at a lower rate.
All right, quickly, for businesses who want to grow and expand, what will be your advice to them, looking at the rates we have now?
Well, it will mean try and get a good track record, because your good track record will help you in the future when it comes to borrowing. When you borrowed in the past, have you kept up with your repayment? And when this credit scoring also may take other things into account. For instance, when electricity bill used to be all postpaid, rather than prepaid now, that was a factor that was taken into account, that when you get your bills, are you paying them on time, or do you get your bills, your meter cut off before you pay, and so on. So I think for businesses that want to borrow at the lowest interest rate, the advice to them is to try and keep a good credit score, a good credit history, where your past will help you in the future. If you don't, then your past will always follow you, and you'll be paying the highest interest rate that there is.
Now, Societe Generale has announced that it has initiated strategic review of operations in Ghana. This was contained in a statement issued a while ago. George Yafe has been going through this statement and joins us with more. What more can we learn, or what more have we learned from this statement?
So, first, Emma, a quick background to this whole situation. First, there was a report which sort of suggests that they are getting out of Africa, and then two other African markets, and several reasons were given. At the AGM, the managing director of SG, or Societe Generale Ghana, said that they cannot confirm that rumor as we speak right now, and it should be classified as a rumor. Well, earlier this evening, there was a statement coming from Societe Generale that is the group, and it still leaves more questions than answers, and I want to go through them. It says that Societe Generale Ghana has been informed that Societe Generale Group, based in Paris, which holds 60.22% in Societe Generale Ghana, has initiated a strategic review, full stop. It concentrates on development and to be decided. It means that review, or details of that review, we don't know. But if it concentrates on development to be decided, subsequent communication will be made appropriate time according to the applicable legislation.
In your view, what do you think a review means here?
A review can mean anything. A review can mean realigning your operations. It can lead to downsizing of the bank. It can lead to maybe that they could sell their stake in the bank. That is too ambiguous for a lot of people. But just to focus on the critical word that it has initiated strategic review of its operations here in Ghana. And that could mean anything, Emma, from sale of this interest to realigning the operations to focusing on critical sectors. Has that review already taken place? These are more questions than answers with respect to this statement coming from the group in Paris about what they're going to do to Societe Generale Ghana operations.
But recently, the Ghana CEO said they're working towards profitability. Is there any hope? Are we, from your point of view, do you think there is any case where probably they could just walk out?
It is quite difficult, and this even the comment by the MD tried to settle the matters a little bit. But this statement that came from the group that has been reissued by the Ghana operations now leave us with more questions than even answers and clarity. What is the meaning of a strategic review? Has that even taken place already? Or it says that the group initiates. It means that it has now started. And what would that strategic review mean? Could it mean that they would actually lower their interest in the bank or what? So, Emma, as you and I stand here, I'm even more confused than ever with respect to what the statement has done and whether rather put the issues to rest, or now there'll be more questions. Was the MD not being truthful or more of economical what he said yesterday? And this is the real story about what is going to happen to the bank. The bank is watching about the impact of this on possible withdrawals, the impact on the share price and all those things. So this statement has rather thrown out more confusion than even trying to settle the issue.
Thank you very much, George. George Wiafe is an editor with the Joy Business Desk. A little longer in the banking industry because the first Deputy Governor of the Bank of Ghana, Dr. Maxwell Opoku-Afari, is entreating commercial banks to ensure that applications for trade-based forex transfer have the needed documentation. According to him, the Bank of Ghana has identified some gaps within the compliance regime, hence called on stakeholders to come together to streamline the process to enhance efficiency.
Financial sector engagement sought to resolve issues on trade-based forex transfer and documentation needed for advance payments. At the meeting, stakeholders called for the review of the documentation guidelines and an upward adjustment of the advance payment threshold for businesses. First Deputy Governor of the Bank of Ghana, Dr. Maxwell Opoku-Afari, entreated commercial banks to ensure that businesses provide the appropriate documentation needed to facilitate advance payments.
With regards to the international trade and foreign exchange transfers, it is extremely important that said transactions are adequately backed by the requisite underlying documentations to ensure proper accounting. Supported by the relevant documentations, importers can execute transfers for trade through different payment options available under trade finance, including advance payments. Among others, the documentation process ensures proper tax accounting, curbs capital flight, and prevents illicit flows, thereby supporting a healthy AML-CFT regime. Banks, therefore, have huge responsibilities to ensure that applications for funds transfers are adequately supported by relevant documentations covering the transactions.
Chief Executive of the Ghana Association of Banks, John Ewuah, called for a review of the advance payment threshold on businesses, adding that the review would create a favorable environment for the business community.
If you are a business, that you can make a transfer of 50,000 without initial documentation, but you need to remedy the documentation by submitting the import documents when the goods are cleared within 90 days, and the limit is 50,000. This 50,000 threshold was introduced 10 years ago. 10 years ago, 50,000 is not the same as 10 years after $50,000 now. So what we are asking for now is that the business environment 10 years ago was very different. Those businesses that the 10 years ago was okay with at the time, they have scaled up. And therefore, the threshold does not address the concerns of the business community because the limit is still stuck in a 10-year, which is a decade-old limit.
President of the association, Kofi Adumako, also underscored the need to protect businesses to prevent a further damage to the economy should businesses begin to exit.
These small, medium enterprises constitute a very large sector of our economy. They contribute in many ways to our GDP significantly. So it's important that we fuel the trade machinery in such a manner that they remain efficient and they can continue to carry out their businesses. Otherwise, they will find alternatives. And we know some of them are already finding alternatives. And the alternatives will put pressure on the banks, will put pressure on the CD, will put pressure on everybody. And in the long run, it's not in the interest of the economy. That's why today you're seeing the governor here, you're seeing representatives from GRA here, you're seeing MDs of all the banks here, you're seeing all the stakeholders come together. We all realize that this is a problem.
Stakeholders were encouraged to collaborate and find solutions to challenges in the sector.
It's building momentum, and only a few days away is the 3i Africa Summit, a groundbreaking global event centered on transforming Africa's economic landscape through sustainable, long-term capital allocation that seeks to unlock Africa's digital and financial potential. Convened by the Bank of Ghana, the Development Bank Ghana, in collaboration with Elevandi, this summit is bringing together heads of state, key finance sector players, and industry experts from across the globe. Kwame Opong is director at FinTech and Innovation Office of the Bank of Ghana and has been speaking to Joy Business ahead of the event slated for 13th to 15th of May.
The Africa Summit is a conference that really looks at achieving a few things. One, policy dialogue that helps move the bar and help move the needle on the friction between regulation, as you mentioned, and the opportunities that the African innovators and the financial sector more broadly is looking to take advantage of. And so trying to have that open conversation between the policymakers and regulators, as well as investors who come together with service providers to really understand how to make progress on these issues. We're hoping that what we're doing is sending a signal to the broader community, not just in Ghana, by the way, but across the continent. And there are other central banks who are participating to have the same discussion because, in fact, the challenges are similar across the continent. So that's one, the policy indication and signaling. The second aspect has to do with actual concrete policy steps, which is something that we're going to be discussing here amongst even the Committee of Governors to really see how we can address certain things. I mean, if you look at cross-border payments, for instance, we're promoting AfTA, and it's going to have a significant impact on us long-term and really help with integrating us as a continent economically. But for every product or good or service that moves in one direction, we have to expect there's payment coming in the other direction. But on the other hand, there are implications to some of these things. How do we address them? So this is the kind of discussion we expect to have that leads to concrete policy outcomes. Now, beyond the policy as well is actual industry impact as well. One of them is that, among the over 200 investors that we've invited, there's actually going to be a deal room to allow, and a pitch fest that allows innovators on the continent engage these investors to be able to present their solutions, to be able to discuss the potential for investment in their business. And many of
Polytank Ghana Limited, a member of the Mohinani Group, has joined forces with Societe Generale Ghana to set up a $13 million plastic waste recycling plant in Ghana. The managing director of SG Ghana, Uzani Hakim, highlighted the enormous potential of the plant to recycle about 23,000 metric tons of waste annually. He spoke at the MOU signing ceremony between SG Ghana and Polytank in Accra.
Generate a staggering amount of daily waste with only a small fraction collected and disposed of properly. To address this challenge, Polytank Ghana Limited and Societe Generale Ghana have joined forces to build a new $30 million recycling plant.
A project which demonstrates the capacity of our industry in Ghana to not only bring added value or industrial added value, but also to add to that the sustainability and the positive impact for the economy. And by this financing of above $10 million that we have made to support this project, we are really happy to see that it is going and it is realizing now. There we are continuing to support the green project. So this is why we are doing it. It's in our DNA. It is our ESG goals. And this project particularly is within, at a minimum, 4 of the SDG goals.
Executive Director of the Mohinani Group, Ashok Mohinani, expressed confidence in the project's potential.
Waste is a menace. We all know about it. And so I'm excited that, we're finding a solution to it, by putting up this bottle-to-bottle plant, which essentially means that you're collecting and it's, finding a sustainable solution to the current menace we have. Yeah.
The recycling plant will have the capacity to recycle about 23,000 metric tons of waste annually. By tackling waste management issues head-on, the project contributes significantly to global efforts to combating climate change. Winston Taki reporting for Joy Business.
As the global economy is shifting towards artificial intelligence, Ghana will not be left out but rather support initiatives aimed at transforming the work of entrepreneurs in education technology space. This is according to Education Minister Dr. Yao Osei-Aduchum. Speaking to Joy Business after launching the EdTech Fellowship by MEST and the MasterCard Foundation, the minister lauded the private sector for supporting the government in its technology drive. Here's more.
Through the MasterCard Foundation EdTech Fellowship, the cohort will embark on a transformative journey of mentorship with support from specialists in education, innovation, sustainability, amongst others. This initiative forms part of the resolve to transform the country's education and technology space by supporting small and medium enterprises in those sectors to be able to bridge the digital divide in Ghana. According to Education Minister Dr. Yao Osei-Aduchum, artificial intelligence is becoming an integral part of the process and will be considered as part of the infrastructure.
I'm excited. AI is changing education, and this is where we need to be, and this is where we ought to be, and I'm grateful that something good is happening. And also the public sector should look at how do we create opportunity for off-taker agreements, that if something is so good, how do we open a platform for them to practice it and to implement it so that they have the economic engine to bring about more innovation.
Are we incorporating AI into our STEM infrastructure?
It has to be. Most of the facilities that we're doing, we are wiring it to make sure it's 21st century ready. So it's not just doing the building, but also making sure that everything that needs to be in is in.
Head of Strategic Partnership at the MasterCard Foundation, Suraj Shah, highlighted the importance of the fellowship to job creation and quality of education.
MasterCard Foundation in Africa has an initiative called the Young Africa Works, and our goal is to enable 30 million young Africans, 70% of whom we're targeting young women, to gain dignified and fulfilling work. Now, in order to do that, we also want to make sure that we support ministries of education in improving the quality and relevance of education to enable these youth to get the skills to tackle the jobs of today and tomorrow. So we work with Ministry of Education understanding where are the gaps that they see in education and skills outcomes, and how do we bridge these with locally innovated EdTech solutions.
12 companies have been selected as first cohort of the fellowship.
When you run a marketing campaign, what will it take to get one person or an entity interested in your product or service? Tonight on Entrepreneur in You, Dr. Maxwell Ampon breaks down how to calculate and utilize your cost per lead.
Hello. Everybody wants customers, but before you get customers, those have to become leads, and leads come from entirely the whole world. So the world is your canvas. Everyone is potentially your customer. So businesses have marketing strategies that are designed to get as many leads as possible, because the aim is to convert a lead into a buying customer. Now, leads are people that interact with your product. They are people that either click on your Facebook or Instagram page, people that make entries. Even the people that buy your products are actually leads. So when you have a marketing campaign, we are very cautious about how we go about it, because you need to derive as many leads as possible from the marketing campaign. Now, why is your cost per lead important? It's because resource allocation is very important for every company now, and therefore we would like to reduce our cost per lead to as little as possible, or to allocate funds to promotions or marketing campaigns that are getting you as much lead or as many leads per Ghana cedi than the alternative. So one might say, I have a product, I want to do a float. At the same time, I want to do online campaigns. At the same time, I want to do, you know, those ones where they go around and explain to you and, you know, take a sample. I mean, I think floats do that, but this is like one-on-one explanations. Right? Let's assume you have 3 different campaigns. Your cost per lead is the cost of the campaign divided by the number of leads that it generated. If campaign number 1, you spend $10,000 and generated 20 leads. Now, that would mean that your cost per lead is 500 cedis. Assuming that on your online campaign, you spent 10,000. You had a lot of impressions. That's not a lead. No, impressions are not leads. But you finally got people to click on your Facebook or Instagram and they interacted with your product or your company one way or the other. And the 10,000 that you spent got you 1,000 leads. That would mean that you spent 10 cedis to get 1 lead. As opposed to, as you spend, let's say 10,000 on the third campaign where you got 100 leads. It means that the third campaign, you spent 10,000 to get 100 leads, giving you your cost per lead of 100 cedis. From this, you'd easily be able to tell that the second campaign is more efficient at generating leads than the other campaign. So stay tuned as the next episode tells us about our conversion rate, which is the efficiency of converting those leads into actual paying customers. Thank you. Keep well.
Brought to you by Africa School of Entrepreneurship.
Thank you for watching tonight's edition of Prime Business. I am Emma Davis. For more business news, do log on to myjoyonline.com. I leave you with international business. Have a good evening.